make sure everything is good to go. It says we should be good to go, and we're live. So here we go. Across the board on the futures that we are looking at right now. All right, let's see. We zoom in. What do we got? Now, okay, this, of course, we always talk about this can change, and probably not really a healthy thing to be, staying up all night looking at futures unless you're trading them, which, some people do. But tech, Nasdaq is flat. We see the S&P and the Dow just down slightly, not even 0.25%. So that's kind of my threshold. If things are not even down or up 0.25%, I say it's really not too much. It's not really noticeable. It's not worth getting upset about, getting excited about, really at all. This could change, and it will change by tomorrow morning. Okay. On top of that, small caps are down the most. At least the IWM futures are looking the weakest across the board. So that's kind of the deal. Now, I think it's going to be interesting. I've been kind of seeing and reading a lot more, as much as I can, at least in terms of getting different opinions and thought process going into the Fed and getting into kind of what may go on the next couple of months. And I think it might make some sense that we could be getting close to a short-term bottom or a bounce point for some tech. Now, I also want to touch on Bitcoin. We'll talk about Bitcoin as well here, because with the tech sell-off, I think people have to understand too, it's not just like tech, it's more of just the high growth, the riskier assets. And then there's also a lot of lists, and you can even look across to different kind of ranking lists of people who've gone through and said, okay, in terms of asset classes, here goes kind of riskiest to non-riskiest. And you kind of can see that the less risky, those tend to do better in a rising rate environment, or kind of when you see these fears, initial fears, inflation, and when you see the fears of the Fed and how the Fed kind of respond with the Fed minutes. And so, yes, but I do think we could see a bounce on tech because they've been hit pretty hard. So we'll dive into all that good stuff. Let's start off here. Let's go over to the big charts. And let's see. This probably works best. Let's make sure that this actually looks good. And yeah, okay. So it's not the best in terms of let me see if I can minimize myself or bring myself in a little bit. I know I'm going to be kind of like super small, but I want to make sure we can see at least the price range on the bottom of the screen. So I'll do that. And that's what it's all about here. So again, this is the Webull platform. The reason why I know it's a pain sometimes for some, because it's small. You can't see the ticker symbols, but it's in the top right. That's the biggest we can get it, at least as of right now, unless they change or update their platform or whatnot to make it so that we can increase the size of the ticker. That's the ticker symbol up in the top right. Okay. So let us dive on in. So I got pulled up Baidu on the screen. This is actually interesting because some of these Chinese stocks, I mean, this thing hit up to over 350, which is pretty wild. And look at where it bottomed out, down around 135 or so. And it's building some higher lows now. And trend line here is up towards about 165. So we'll see. I do want to also pull up one more thing. Let me reset this. Let's go back over to FinViz. Let's talk about this really quick, and then I'll open Webull back up, and we'll get going on to some charts and dive into some stocks. So I want to start here because we can get a really good feel for how everything is setting up. Here's a past week, okay, in the markets. So this is where I think we're going to see some opportunities. I'm going to start to look at some of these stocks down here in the bottom left, even in the energy side too. We'll look at some of those stocks because they could be setting up, and a lot of stocks underneath those, maybe not the biggest names, could be setting up for some continuation, and we'll have to see. But, okay, tech, Microsoft, NVIDIA, Adobe, Google, big names down, Apple down. I mean, you see it across the board. Software plays down. I mean, software got hit hard. CRM got crushed. Autodesk. I mean, a lot of these stocks got absolutely annihilated this past week. But bottom left, look at some of these names. The banks, okay? Wells Fargo had a killer week. Bank of America, strong. We even have Citi, and then I believe JP Morgan here is where I think we might see potentially a little more activity, and I'll explain why I like that chart the most out of some of the banks, and we'll dive into that chart. Okay, so let's pull Webull back up. We'll go back over here, and then we'll pull us up. We'll look at some charts. We'll look at Bitcoin as well, and we'll get going. But I want to pull up JP Morgan first because the banks generally rising rates. Will do better. So we can take a step back here. Here's the weekly chart for JP Morgan. We have this little trend that it kind of held up, and it had a nice extension. And then roughly as of late, you kind of can see, roughly trying to build higher lows, something like that. Not perfect, in terms of the trend, but really, really strong week last week. Really, really strong week in a rocky market, okay? So let's go to the daily chart here. It's setting up. I mean, it's setting up where it's kind of flagging almost, right? We have this initial pull, right? You can kind of see here's a bull flag set up. Here's your initial flag to the upside, your pull, the flag, and then you kind of can see, let's do rectangle. Here's your flag. I mean, you kind of have support here down towards about 163.50, resistance up here over 168. So a break and hold over 168 could be setting up for a breakout to the upside and a possible shot to all-time highs, which we see here are about 173 or so. That's your all-time high level, okay? So we got some significant resistance to kind of grind through in the next, in the next week or two, depending on how long it takes to get to that level. So we'll see. But if we see continued tech selling, this could be a very strong stock in the sector. Now, personally, I don't necessarily love this setup right here because you're buying it up. If you're buying it now, you're buying it at resistance. So on pullbacks, I like the banks going into this year. And of course, we will see what happens in terms of the overall, right? Okay, how many times do rates actually get raised? If it's 2 times, if it's 3 times, we'll see. But this on pullbacks close to the trend line as possible could be really nice. Now, it's not a super volatile stock by any means, so personally, maybe options might play be a little bit of a better idea. So if I'm looking at something like this and I'm looking for a move, I'm looking for a couple months out time frame. If I'm looking for my move to happen within a month, so I'm looking for at least like a 2 to 3 month time frame. If I'm looking for a move to roughly happen within a month, and that's the idea behind that. Reason why I like that play, JP Morgan over Wells Fargo. Look at Wells Fargo. Now, it had a super strong week, but it's really breaking out to all-time highs. You kind of already got that extension. And so I think the bulk of the move, right, the risk-reward isn't as friendly for a Wells Fargo. Citigroup, ticker symbol C. This is an interesting one because it's definitely not setting up the exact same way as the other bank plays. So take a look at Citi, right? If we take a look here, we kind of have this area of consolidation. So we're getting back up into this level. So you're kind of in an interesting spot. You have some of these levels right here down around the 66, 65 range. That was prior support over the past couple of months. Now you're getting up into that area, prior support becoming new resistance. So I'm kind of a little cautious on those. But longer term, bigger picture view for maybe the next 6 months, these could definitely set up. So pullbacks, I would say, are at least some that I'd be very interested in, some of the bank plays. We'll see how that plays out. But if we get a really big bounce on tech, all of a sudden everyone jumps back over to tech for a day, that could be kind of a dead cat bounce. That could be kind of a fake out almost in a sense. We'll see. But speaking of tech, let's go to QQQ and let's pull this up. Here's where we finished the week last week on QQQ. This is a decent pressure to the downside, I would think. With 4 red days in a row, if we kind of look at where we are literally at support. So it is I guess a risk, if you want to say, to short it. But if we get a flush through and a continuation follow through down below this level, below like 378, and we hold below 378, I like QQQ down to like 370. I think we can easily see 370 or so on QQQ. So that's the level I'd be watching on that thing. And then we'll see if we get a potential touch of the 200 SMA, which look at this orange line. We have not touched this. We pulled back, right? We were so high above that 200 SMA that a pullback that we got from those all-time highs here in, looks like September. That pullback from September to October a month was only about 8%. And it didn't get us close to that 200 SMA, which was probably about 10% off those highs. Let's see if I can connect this little line right here. No, for whatever reason, it's not letting me do it. Let's try it again. Okay, so from these highs, that 200 SMA was about 10.5% to the downside. So from our recent highs, let's see how far off that line is, if it's any closer. It's about 9.5% off. So we're that's a realistic bounce point if we can't hold up this week around the 380 area. Now, we also talked about how these levels are interesting because we're really kind of the trend as of late has clearly changed. The slopes of our trajectory, right, has changed. So you guys can kind of see how strong of a slope we've kind of been looking at, and how strong of an uptrend we were seeing. Really, obviously, since the pandemic crash, but even back in 2021, very strong. Now, that's definitely slowing down. We're seeing more consolidation. We could be looking for a pullback. And even if we don't pull back because the economy, hopefully, you see both sides. You see a lot of people who are very, very bullish. I believe I read an article talking about how Bill Ackman, a famous investor, whether you want to say that he had some insider information when he made a big short back before the pandemic period last year or 2 years ago, whatever it was, whatever. But the guy's made a lot of money, and so people hear his opinion, and people like to, at least see where he's at, where he's thinking. He's very bullish. I was reading an article. He's very bullish, at least into this year, based on the Omicron and whatever, all that, the state of that stuff. And so, this, even if we don't necessarily, people can be very bullish and we can have a 10% year, what I'm saying, which is an average year for the overall markets. And then that would be honestly good. So I think we're much more on that trajectory rather than these kind of wild, crazy swings. So that's what I'm actually really, I'm very excited if we kind of see that and things kind of slow down, the pace, the runs slow down, because my anticipation for that will be then we look at small caps and those should do very, very well. If the market has a year of an up 10% year, kind of slow grind, obviously chopping up and down, but kind of a slower grind, less volatility through this year, we'll see. And that's a lot to ask, right? But if that happens, I think a lot of small caps will get picked up because then we see less volatility, less action on some of the big names, large caps. Then there's more incentive to play the small caps that are going to move a lot more, right? Intraday or over the course of weeks and months. So I think that's my thesis, or at least, for going forward this year. It may take some time to adjust and figure that out, and it may take another couple of weeks, couple months, but I do think small caps will have a strong year. I think that the general idea of sell in May and go away is kind of the idea, right? I think that I don't know if this is the best year for that. I think that could be flawed this year. There's just too many opportunities, I think, in that space. So maybe, we'll see how we get back to the summer months and see how that plays out. But the general time frame and cycle of small caps, how they get hot in the winter, kind of cool back off as you get to the end of the spring and into the summer months, and then heat back up towards the end of the year. Well, that didn't really play out the exact same way this past year, and so I don't think it's going to play out the same way again this coming year. And so we're kind of we're kind of writing a new script in a sense for small caps. We'll see. Okay. Grab C at the lows. That's awesome. C has been solid. Citi's been solid. OSAT. Thoughts on 25 million market cap, very low float. Let's take a look. OSAT. I have been seeing. Let's pull up. Go to the daily chart on that guy so we can kind of see. It's curling off the bottoms. I like that. It does sound familiar because I believe I have been seeing some insider buying on this guy too. That's one of the things I've been looking at. This chart, by the way, on Finviz. I mean, these are the charts I love for small caps because what are you looking at? You're bottomed out. You're dead bottomed. And the thing is starting to show a little momentum. That's probably because you got some insider buying. And here you go. Look at this. We had VP and CFO, Director, Chief Business Development, Chairman and CEO, President, CEO, Global Ops. Those are all the insiders buying. Now, I do want to go to openinsider.com really quick, and let's pull up OSAT over here. Pull it up, and let's see what we got. Okay, now here's what I like to look at. Open Insider is better for this, in my opinion, because they will tell you the percent owned, the percent change, or the change in ownership, okay? So when I'm looking at insider buys, okay, and I see a 1% increase in ownership, or a 5%, or a 2%, is that good? Okay, yeah, insider buys, there's a lot of reasons why insiders could buy, or there's generally speaking a lot of reasons why insiders could sell, not all being bearish. And there's pretty much, one fundamental reason why insiders buy, right? Maybe two. Either you want to be the cheerleader and look good on paper because you're packing a nice salary and you want to make it look appealing that you're buying the stock and you're tossing some money of your salary in. Now, how much money would you be putting in? If you're making $1 million, I don't know, you're making 100,000, who knows how much you'd be putting in. So these numbers seem decently sized, depending upon how much these employees or the CFOs and whatever, how much they're making from the company. But two reasons. Either you want to be the cheerleader, which I think is okay, whatever. But I think really fundamentally, you think the stock will go up. You think the stock is undervalued. You think the stock will go up because of what you know. And it's not like you necessarily know insider information. You do, but you also, or at least expose yourself saying, hey, I'm buying shares. So whether you know something or you don't or whatever, you're buying shares. Now, if you're going to go tell somebody, hey, we got this product coming out and it's going to be really good, about to get some phase 1 or phase 3 data that's going to be really solid, it's going to be positive data. You tell somebody that, obviously that's insider trading, so that's against the law. But you can buy your shares and say, hey, I'm buying shares, because I think our stock's undervalued. And essentially that's what's happening. So at 324, we had these insiders buy. Now we had a $2.2 million position right there. Look at this, a ton of shares, 600,000 shares. But I'm seeing a 13% increase, a 67% increase, 277% increases, and a 37% increase in position. That's pretty substantial, in my opinion. And so I like that. Now, chart-wise, we have resistance at the 50 SMA. So we are up here, but any pullbacks or any dips under $4 versus the lows, I like. Now, what's your risk here on this stock? Obviously, the risk is more small cap just selling, more just weakness in small caps, yes. But look at the past history on this stock. This stock comes out, right? We have seen this stock go from back here, very similar, honestly, setup, I think, to we saw back in, looks like June, July. Take a look at this. We saw the stock kind of push up and then start to kind of pull back, and then it held up and it built higher lows. Couple days right in this range looked to me like we could have been seeing some loading. Okay, what does this mean? The stock kind of pushed up, it had these higher wicks, but it pulled back down. That to me could have potentially been insider loading or whatever. Someone loading up or bigger money loading up before catalyst. And then we got these massive moves, 2 catalysts, at least 1 catalyst, possibly a second one, which will be spiked again. But the stock went from, let's see the lows here, from about like $5 up to 10. So it went 100%. Okay. And then it went again from the lows here or from the pullback here from about 680 or so up to 15. So it went on 120%. Okay. Look across to the right-hand side of the screen. It's been a while since we made a run like that. It's been a while, right? Now we're kind of setting up any dips against this level, right? Against the support that we've been seeing, those lows, I like on this one. So OSAT, low float stock, small market cap stock, have some cash. Now I would want to look into, if you're looking at this from a due diligence standpoint, what catalysts do they have upcoming? Do they have any catalysts upcoming? And just because they have or you may not be able to find anything doesn't necessarily mean it's a bad idea, because sometimes, these companies, if it's been a while since they've dropped a PR and they want to kind of get them more interest on their stock and they want to spike things up, well, they'll drop a PR at any time. It could be fluff news, it could be whatever. Now, fluff news hasn't been doing that well, I will say that. So you need to have something substantial to your news, or it's got to just catch, and you kind of got to get lucky in a sense, and that's what we've been noticing, right? Some of these stocks that have fluffy news, for whatever reason, they're just low floats, and, algorithms pick it up, or traders love it for whatever reason. They funnel in, volumes there, and they become the stock for the next week. And they kind of have their push, they pull back, build higher lows, they hold up, they don't die, they have their secondary squeeze out. And every time you get those squeeze outs, every time you get those extensions, those vertical moves, that's when you want to be taking profits, not when you want to be buying, unless you are strictly a momentum trader. You got like hotkeys set up, you're quick, you're in, you're out, and that's it. If you're from my standpoint, when it comes to small caps, I'm much more of the buy these things low before these things have spiked, before the catalysts have come through and all that stuff. I just think that's been a much better strategy, at least for me. Or if you want to play the momentum base, right, the thing gets a little pop. Okay, now it's holding up. For example, OSAT right here. As long as it holds up over this like 385 or so area that it's been holding this past, looks like Friday, well, it's not dying. It's not going away. This could be setting up for a secondary, push. And then you can play the same thing. Even if this initial move was off of news, was off of, a press release, whatever it was, it could be any stock. It kind of makes its initial run, it spikes, and it comes back, and guess what? It holds up. It starts holding at a level, and then you look at the chart. You say, hey, yourself, this thing hasn't dropped below in the past day and a half, 385. I'm going to hold this thing. I'm going to use 385 as my stop loss. Now, maybe not put a hard stop, but I'll watch it. I'll put an alert for 385. Under 385, I'll come back. I'll check the chart. If it dips below and quickly regains, I'll stay in. If it dips below and starts to, hold and sell off, I get out. And that's kind of how you want to play those momentum-based swing ideas, right? All right. Let's see. Affirm and PayPal. Tesla. Okay, I'll look at Tesla and we'll look at Affirm and PayPal. Okay. TSLA. Tesla didn't look good. It finished kind of bearish to me because it fell below this level right here. I'm looking at $1,000. If it can hold $1,000, fine. If not, I think we can see this thing down back into the lower, at least $950 or potentially down towards $900 on Tesla. I would love to buy some more Tesla. Honestly, I would love to have this thing pull back and look at this thing. Anything under $950, in my opinion, is a decent buy. As long as you're willing to hold this thing long term, we could go into a bear market for Tesla, or a period of time where kind of like this, where the thing kind of just shops around, has a dump, pulls down under 900, pulls to 800, who knows, right? And then that's a better opportunity. Yeah, sure, but I think under $1,000, under 950. As long as you got some time on your side and you're not really, worried about playing options for next week, then yeah, this is something that I personally would be buying for the longer haul, an IRA type of play. All right. AFRM, I do like this. I think Affirm could definitely come down a little bit more and kind of consolidate more. It did have its initial pullback and it filled the gap. Okay, our gap right here was down towards about like 74, 75 bucks. We filled that gap barely. I think a firm could show some more weakness and consolidate a little bit more down into the mid to low 70s. I think that would be a better opportunity in my opinion. However, if we get an aggressive tech bounce, this is one that could bounce back to 90 bucks, even 100 bucks very, very fast. So I would be ready for that. These are some of the stocks. Affirm is one of them. PayPal, not as volatile, right? But Affirm is one of those stocks that I think if we get those aggressive tech bounces, for example, QQQ bounces, has a really strong day or a couple strong days in a row, Affirm could be back up to 100 bucks or at least 90 bucks, just like that. And so there's going to be opportunity there. Then I think we might see kind of a pullback down and more of consolidation, building higher lows and more of a slower pace potentially on some of these quality stocks, quality companies going forward. So that's Affirm, my thought process there. We got some support here down around 74. I think we could see more weakness below that, but anything under 75, I think is a better buy for the longer term. I think there's a lot of buying behind this, and you're also getting back down to levels that Affirm was trading at. Now, okay, Affirm was trading at, sub 75 levels before a lot of the news that sent the thing up, the partnerships and the deals with Walmart and whatever, they had tons of great PRs, tons of great partnership or whatever news that they got, partnering up with Apple, I believe, Amazon, if I'm not mistaken, and Walmart, some big names, right? So now you're about to give all that back away. And yeah, okay, was this thing maybe inflated as it was? Sure. But you're going to give all that back away. Here's also our trend line, which is really interesting too. We kind of came down right to that trend. So this trend that we kind of held up from May through the end of the summer months, we pretty much, you extend that level across, we held that level. So 74 is a key level on a firm. Under 74, well, this may bleed out a little more. Maybe, who knows, comes down to the 60s and consolidate for a while, especially if we see some, downside with tech. Other side to a firm too. Buy now, pay later is, one of those things that I think there's been a lot of hype around. I don't know how many people really necessarily like it. And in a rising rate environment, is that the smartest thing? I'm not sure how exactly that affects their business model, how it affects their potential customer base, but that's a question to at least I would look into on a firm. Next is PayPal. I know of some big funds that took this and had to essentially tax loss harvest this because I think a lot of big money likes this stock. And it's setting up. I think PayPal is another one that's setting up. If we get another flush out, this could be a really good buy. But here's our higher lows. We have 3 dips down to this line. So we have this 180, we had a 182, and then a 185. So 185 is our support for right now. Below 185, this could get that kind of potential bear flag set up. I would be a little bit hesitant behind that though, because I think fundamentally here, this doesn't have a lot of room to go down fundamentally. I think that you'll see bigger money piling in. So if we get a kind of flush out below, we could come down, and that flush, if we do break below some of these lows, I would buy that. I'd be looking at that as a good buy. And I would probably be looking at that, buy that flush out, maybe give myself 3 to 6 months on some options. Ideally, go out with some leaps, play, a year out, ideally. But I think you're going to see throughout the next couple of weeks, you're going to see a lot of that money that had to dump PayPal because, hey, they took a big loss and it was an easy one to tax loss harvest because of the downtrend it had, or the downturn it had really the second half of the year. This is one that I think a lot of funds are going to start flowing back into. So we'll see. All right, let's see. I am sorry, I'm behind on the chat, but we will dive through. Going to short Nasdaq with SQQ. That's another way to play it too. You can play SQQ. If you wanted to do that, you would just go ahead and buy SQQ. And then guess what you're going to do? This is obviously rigged to the downside, but when the Nasdaq goes down, this goes up. So you can play that. Look at how this has had a nice little run off of the low. So from all-time highs, if you had just utilized like an SQQ, position to hedge yourself when you get back to all-time highs, from that level, this has made a nice, 20% move. So you're up 20% on SQQ if you bought this towards all-time highs, and then you could just sell it into any flushes and then, lock in some gains there, and it minimizes your losses to the downside when we do see, market pullbacks, which is, I think a great way to play it, especially going forward. Here's how I see it. The faster the market goes back to all-time highs, the larger the hedge I would have. And you can hedge a bunch of different ways. You can buy SQQ, you can go ahead and buy inverse S&P ETFs or whatever, or you can go ahead and just buy some UVXY or buy some UVXY calls. The risk on buying some of the call options for these different, hedges is the time frame. So you want to make sure you give yourself time on these. And that's where maybe just shares might make some more sense. It's a valid idea. I think UVXY, in my opinion, you can go with a couple call options, but I would say having a good chunk of shares is a better way to go, because from some of the lows from the last fear, I guess you kind of can say the end of November, early December, we saw UVXY, this is the volatility index here. This is like kind of giving you a feel for how volatility goes. This thing kind of went from 15 to 25. It went 75%. I mean, that's a pretty big move as it is. So that's a good hedge. To me, that's a good enough hedge. Now, the risk is if volatility kind of bleeds out and there's no volatility, this thing is going to go down just every day, right? So buying this thing as it hits new lows, when everything is quiet, when it seems like everything is fine and dandy, generally has been a decent play. Honestly, not even looking fundamentally at the economy, not even looking fundamentally at the markets, just looking at this thing from a chart perspective. Look at the daily chart here. Every time this thing does go down to new lows, you generally at some point you get a spike. It goes, you can even do some math on how long it takes to get a spike. So if things get really, really quiet for a couple weeks, we're progressively hitting new low after new after new after new. Boom, this is an opportunity, I think, to either grab some calls or grab some shares and just have yourself hold that as a hedge against the market. But again, long term, you don't want to hold this as a long-term hedge, because again, long term, the thing is going to go down, and if the market never crashes, you're going to be down huge. So it's a risk there. QQQ triple bottom, yes, exactly. That's the exact thought process that I have there. We are looking at a triple bottom here on QQQ around the 379-ish area or so. It's bounced now 3 times, once, twice, 3 times. First time here at the beginning of December, then mid to late December, and now again here in early January. So if we do break below, I think we're going to see 370 pretty easily, and we'll see. To be honest, I would love that. Just so we get a flush out, we get a lot of tech names that would aggressively sell off on that day or 2 days, or maybe this week. If it sells off down to those levels, then that's where I'd be looking at a tech bounce. Whether we get a bounce back and tech kind of regains the next couple of months to all-time highs, I don't really care. I'd be looking at a bounce back. Let's say we drop down to 370. I'd look at a bounce back up to 380 on tech, which that's about a 2.5% move on the QQQ. That would probably give you 5 to 10% moves across the board on a lot of other tech names, higher beta names. So look at some of those, like we just talked about. Affirm will be one of those. Robinhood has been an insane play too. This is setting up for one of those, I think, very aggressive bounce days at some point. Now, it kind of showed some signs of that this past week. We shall see. It held up. It was actually up. It finished up on Friday. But if we see a green day in the markets, I expect Robinhood to be one of those stocks. If tech holds up and is green, Robinhood is one that I think has a little more range to the upside. Then those extensions could be easily hedged or at least shorted back down because you get those crazy moves. I wouldn't necessarily say you have to play puts. You can go ahead and play some option spreads. There's a lot of different strategies and option spreads where that came from, and those strategies are great because a lot of them you could take advantage of the time decay. So even if the stock doesn't move, right? If you get a crazy big day up or down, many times you can get that just kind of it traps everybody, all of a sudden starts buying calls, the bottom's in. But if Robinhood pumps up to 18, 19, 20 bucks, I wouldn't want to buy that thing long. I'd say wait for this thing to come back down. Obviously, it could do whatever it wants to do, but I'd say wait for it to cool back off, consolidate a bit and maybe buy this thing back in the, 17, 16 range, potentially, right? If it does have a huge blowout, green day. So that's kind of how I think a lot of people get trapped in buying calls, especially if you buy short-term calls 1-2 weeks out after huge moves. You almost always get screwed. NEO is the last example of that too. NEO, I think everyone thought, oh my gosh, bottom's in, and we had this huge run on the 30th, and then guess what? The 31st, we just kind of slowly melted back down $2. The next day popped a little bit, and then after that pulled back, and kind of you see what happened, and it just kind of slowly faded back off, and the bottom is potentially in, but you got a better deal if you are now buying it now after, a week after that, run, than buying in that run or the day after that run. You kind of bought the top, at least short term, right? So Let's see. Neo, Tesla, AMD, AMC. Let's take a look. AMC is an interesting one too. Let's see how this one is looking up chart wise. So it kind of bottomed. It has almost the same look, a double bottom here. It's $20, 21 roughly on AMC. So I'm going to draw a line there. And they're like just under about 21 is your good support on AMC for now. So we'll see. That's kind of setting up. And AMC has been a good indicator of retail strength and retail sentiment. So it's also the number one holding, I think the number one weight in IWM. So it's kind of one to watch, at least on that front. AMD is an interesting one as well. AMD, I had a bunch of lines. Let's see how it's setting up. Yeah, broke below. So AMD is also at this level right here, which was also a prior support. So I'm going to draw a line right there. It looks like around 132 or so. 131-ish on AMD. Under 130, I think we can see some more downside on AMD. And then below that, we could see down towards like 125, even 122, 123. I was this high right here on AMD. So I'm going to draw a line there as well, which lines up with this high that we saw back in August. So I'd be looking at some of these levels on AMD. It's been a interesting, stock on very weak days. This thing tends to pull back, and you got a pullback of like $4 on Friday, the day before or Wednesday. You got 143 to like 136. I mean, there's some range there on AMD, and so I expect the exact same thing on bounces. So we have a strong day in the market. This thing firms up. Market seems pretty strong. Tech is doing well. AMD is probably going to have a solid day. So there's good opportunities, I think, across the board, a lot of those. All right, let's see. EXPI. Let's take a look. I'm going to start firing through some of these. EXPI. Pull this bad boy up. This thing got hit pretty hard. Take a look at the chart here. Daily chart wise, okay, so we are sitting here at like $28 a share. If that area can't hold, then you might be looking at this thing down towards like 23, even 25. It was some of the lows that we saw back in, looks like May. It looks pretty weak. It's kind of setting up, and it had that almost that bear flag look, right, where you have the extension down, and then you had try to consolidate, but couldn't really hold up, and then it's now extending down again. Now, the extent of the second leg down, we'll see how far it goes. It showed some signs this past week, or Thursday, Friday. It's got some wicks, so I would be interested to see if 28 holds up, then this could be that short-term bottom for a move back up to the mid-30s, potentially more. But if we don't see 28 hold up on this guy, we could be looking down towards 25, even down towards 22.50. Some of the looks like a double bottom we had back here in May. I'd look at that as the next area potentially of support. Also, we could draw a little trend on this guy too. Can we? Yeah, almost. I mean, kind of. From back in here, back in 2020, we had these lows here in 2021, and now we're very close to that level there. So that 27 to 28 is key. If it can hold, then this could be the bounce point. Mesa for an airline play. And the thing is, I have nothing against a lot of other airlines. Personally, this one I haven't looked too deep into. I'm fine with some of the bigger name plays, honestly, that I am currently holding. But doesn't mean this is not a terrible idea. I guess had a really nice run with the airlines back here in February through same period. February through March of last year was a really strong period for the airlines, and this thing went 150%. I'll put it on the list. I'll add this and OSAT on the list because I think these are two that are very valid plays. Let's see. Add these two, OSAT, and then let's see, and Mesa. Because if we do see a really nice recovery or push on airlines, yeah, you bet there's going to be a lot of other names, a lot of higher beta names, a lot of other, more volatile ones that are going to do a lot better than the big names, right? So like American Airlines, you got to look at that chart. American Airlines did from February through March of last year. This thing went from like 1660s to 26. It went 55%. And I think it could be setting up for a similar type of move. But there could be other ones that will do a lot more. For example, Spirit Airlines. Obviously, when we see downside, Spirit Airlines tends to do worse. But when we see upside, this thing can do better. So Spirit Airlines from February, let's see, last year, it was up right in here, like 26. It went from 26 to 40. So it went to 52, very similar percentage-wise. But it pulled back from the highs, or from what we saw this past year. From those highs, it pulled back about 50%. So could Spirit make a 100% move? I think it very, very well could. I mean, from where it went, from where it bottomed out, okay, went just below $20. 100%, it's going to be 40, which would be right into kind of range of the recent highs from 2021. So yeah, it could easily do 100% from those lows, which would be insane. If Spirit goes from where it's at now back up to $40 this year, it's a 70% move. I'd be very impressed with that. But I mean, my target on this is up towards about $32. Personally, I'm looking at that as my level. JetBlue is another one that I like, that I have. JetBlue, I'm targeting 18. So from where we're at now on JetBlue to 18 is not that much. It's about 20%. But again, that's the core. That's like the core of the move that I'm looking for. I will take, probably at those levels, half of my positions off, and then I will probably ride the rest and look to make sure I lock in, a good chunk of gains there. I have no problem. I mean, not that I wouldn't want to see these through to the end of the year if they do really have strong, first halves of the year on the airlines. But I definitely think I'm going to probably take a good chunk of this off, if not the whole thing's off. If JetBlue gets back up into the 20s, if Spirit gets back up into the mid to upper 30s, I mean, I'll take the whole thing's off. I don't care. And I got the bulk of that move, and then, I'm looking to hold a lot more cash and then be a lot more, nimble, I think. We'll see. The market could change, swings could come back in full force, and all of a sudden I'm swinging, a lot of size and other stuff. We'll see, but that's kind of been the play. And it seems like that's probably a much safer way to do things, because the market's kind of back to, I would say, how it was pre-pandemic in a sense. A lot different, I would say, but, in terms of, you can't just buy every small cap and they're all going to go up. It's not going to happen. You need to be a lot more selective in the small cap space, at least just how I swing things. All right, let's see. IMR and skills. IMR, this one has been an interesting one. It has been. Oh yeah, this is another one. Immersion. This is I believe metaverse related play. Look at the hype that this thing saw early. This thing got a lot of hype back in 2021. Of course, everything ran. We got a lot of hype, I think, with metaverse talk back in here. By the way, Meta, Facebook, is just rented out or bought or whatever. They're putting up a new building. This is the tallest building in Austin, Texas. They bought like the bottom half. It's like 30 something floors, all for like new offices. So like that's like a block away, which is pretty wild. But that all got a lot of hype, I think, back here in November timeframe, and then faded out, I think, with a lot of heat the market took. Tech, small caps, so this is setting up. It's back down here towards $5. I kind of like IMR down towards 5. IMMR, immersion, is a ticker symbol. And then let's take a look. What was the other one? We got skills. Skills is down low too, right? Skills is $6. Hit new lows this past week. Skills is another one too. What's the market cap? Market cap on skills is 2.5 billion roughly. Yeah, I mean, skills is interesting. I'm gonna look at the. Let's see. Let's go over here. Let's see if we got any insider buying on skills. SKLZ, and then let's take a look at FinViz. Let's see. Do we got any action on here that's notable to not talk about? Price to earnings is 2.98. Price of sales is 7.9. It's actually not that bad. I mean, these stocks, like, the reason why I think it's interesting, by the way, we got a firm ad right here. Queen size comfort for as low as 0% APR with the firm. Look at that for Casper mattress. There you go. So these numbers are coming back into like range in terms of like, these aren't as outrageous as they were. Some price to sales ratios were like through the roof. PE forward, like these numbers were nuts on a lot of these stocks. And a lot of these companies did a good job, because what they did was they raised a lot of capital over the past year. And that's what I think is really, really encouraging for a lot of small caps, is that a lot of these companies, they took advantage. They did offerings. They raised money while these stocks were inflated. They took advantage of that. And now what's so crazy is that they've gotten sold off, right? Tech, growth, all these things got sold off so much. But now these companies are actually fundamentally in pretty good spots, because, yeah, the stock's down a lot. And so what? Do the company, do they really care? Yeah, maybe the insiders who are holding are hurting, right? Who cares? They don't care if they're, looking at the longer term here, and they're obviously not going to, go bankrupt or whatever. They don't care. They're like, you know what? Our stock is down a ton, but our balance sheets are looking strong, and they're looking better and better. And now we're setting ourselves up for a really good couple of years. And the growth story is there for a lot of these names. So skills, man, under $7. If it falls under 6, if it falls under 5, skills is one that I do think is worth a shot too. Maybe, give yourself, buy some and give yourself a couple months on that for the dip buy. And this could be even a quick swing, So We shall see. But yeah, they're getting down to some levels that, man. Double down skills at 7.39, now down to 6. Long. I mean, hey, the thing, even if we go through another 3-4 months of more pain and in growth, skills can go down to $5. Maybe it goes even sub 5, right? But it could bounce back to 10, 12, 13, 15 in like, a 6-month span of time. After that, we can see some crazy surges. I mean, the thing it has range. It's done it before. Back in October, it went from 8 up to about 13. Pretty big move there. Back here and earlier this year, it went from 12 to 22. I mean, the thing has done it before. It went from even $13 to 25, almost 100%, like that, in about a month and a half. So, the longer these downtrends sometimes on bigger and at least not saying bigger, on more quality names or stocks that are coming into more fundamental ranges that make a lot more sense. The longer the downtrend, the bigger the move you can get to the upside. All right, let's see. Reddit IPO. I don't know. That's an interesting one. The Reddit IPO could be worth a pump. Who knows? That could definitely get a nice little move. Personally, I haven't looked into any numbers behind Reddit's IPO or what their numbers are and stuff. Mesa looks good. Valuation. Checking goals. Yeah, that could be setting up. Mesa. Let's take a look at some of the numbers we got on Mesa. PE 13.24, forward PE 6.7, price of sales of 0.41. Some of these numbers are really nice. I mean, if you look at these numbers, they're in the green. That's generally seen as a better buy on some of these things. So Mesa, I'll want to look a little bit deeper into this one, but this could be setting up. So what I would be saying too with some of these airline plays is what you're going to look at is something like this could be setting up very, very nice for a slight lag. So you get the big moves on the airlines, right? Then you see stuff like this after the airlines are showing really good strength. Then this has a really big run, right? This has a nicer run. So this could make a move from down under $6. Who knows? Back up into that. I think that gap fill is really nice, up to $7. I think we can get to $7 pretty doable. And then maybe we can even make a move maybe up towards 10 on Mesa. It's very realistic, I think, on Mesa. So I'm going to look into that one this week, and I'll see. Obviously, I got a decent amount of the portfolio already into some airline plays, so I don't necessarily need more exposure. But for a short term, move, maybe buy some calls out to I don't know. Let's take a look. Let's look at the call and how this is setting up here on Mesa. All right, we got skills. Let me pull up Mesa. Mesa Air Group. Let's take a look. If I wanted to go out to, July 2022. Have we got any volume on the call side? Not really a ton, but we got, I'm just going to just look at calls here. All right, so open interest. We are not looking at tons of open interest by any means, and I wouldn't expect that. But, you can get some $5 calls here on this thing out to the risk reward there is nice, in my opinion. You buy these $5 calls, not saying that we got to get ahead of ourselves, but if it goes to 10, let's just do the math here. Okay, here's the weekly chart. Okay, so this is what happened. Last February, this thing was, a little bit higher than where we're at now, but roughly where we are now, right? Last February, we went from, in a span of about a month and a half, 2 months, you went from about $6 hitting highs up over 17. 6 to 17, okay? So, I'm not saying we're going to 17, but if we go to 10, let's say we go to 10, and airlines have a really good next 3 to 6 months, okay, you go to 10. These options right here, let's do the math, okay? It's about, you got yourself about 6 months out, 187 days to the expiration. You buy the 5s and it goes to 10. Those 5s are now going to be worth $5 intrinsic. So do the math. I mean, let's look at the option chart here on these things. So these 5s, if I can zoom ourselves, or, we can really broaden this out. Let's see. I have to adjust this chart quite a bit. But this is just showing, I guess, a better view for the potential with options rather than, shares. And obviously there's a risk there, but if you're buying in the money options on some cheaper stocks, there's potential. Okay, so let's do that here. Now, okay, you buy it. Let's say you buy them for 140-ish tomorrow. Who knows? And you buy these things out and they go to $5. It's a 250% return on your position. And the stock in that span of time, the stock would have to go from here to about 10 bucks, you'd have to get about an 80% move in the stock, which is, it's done it before. It's possible. Stock moves 80%, options go 250. I mean, that's why the risk reward there on in the money options makes a lot of sense. And that's why you see a lot of people who have, a lot of big money, a lot of funds, or even a lot of just bigger investors, they'll go and buy super deep in the money options, right? Now, okay, you're almost trading like a stock, but you're going to put down, and for a move of let's say on even like Google, right? You go to look at Google stock, or let's look at Apple. I'll go to Apple. We'll look at some deep in the money options for Apple. Let's just say that Apple goes to 200 bucks in the next year. Let's say we finish 2022, Apple's at 200 bucks, okay? And let's look at some call options that would go out to let's see, January 2023, okay? Let's say you buy the 125 option. So we're like 50 bucks in the money. We're really deep in the money. Let's say you buy these, okay? Let's go to the chart of those. You buy these 125s, okay? That means they're going to be worth at least, well, so the Apple finished at 200 bucks. They're going to be worth 75 bucks. So you buy them now, they're worth about 50 bucks, 52. They're going to be worth about 75. You're going to make about 43% on these options if Apple finishes the year at 200 bucks, okay? And if you look at the stock, so 43% there on the option, okay? And those are deep in the monies, okay, right? If you go to the stock Apple, and from where we're at right now to 200 bucks, that means you would see about a 15, 16% return. So, this is where when you have big money and you're looking at moves, why wouldn't you go buy some, even though they're really expensive, just go buy some super deep in the money options. And even if the stock goes 10% this year or 5% this year or whatever, you give yourself plenty of time. You're going to make a lot more than you would if you're just holding shares. So obviously not with, a ton of all your portfolio, but you can see why people like to do that. And, that's why I kind of played the same route with the airlines, is just going deep in the money. I didn't go like that deep, but I went, in the money at the time, fairly deep in the money. A couple bucks for the airlines, a couple bucks for JetBlue, about $5-10 bucks for Air Spirit, and, looking for nice moves on those. And if the stocks go 50%, the options are going to go like 100%. So I love doing that. Let's see, Beach, but I'm good call on Boyle. Let's take a look at Boyle. How's Boyle doing? It's setting up really, really nice. I like the setup right here. It's bottomed out. We talked about this one a couple times, and look at that. Down here towards under 25. Appreciate the shout out. Let's see. Mace looks good. Let's see. We'll go talk about that. Gap on Tesla 940. Let's see. Let's go back to Tesla right here. It filled the original one to 900 bucks, and then we have this right here about 940. Yes, this is the gap here on that initial breakout of this downtrend. Yeah, about 940 is our next level of support. We had this. I can get rid of this because we already filled it. That was our original fill down to about 900. Now we have a new one right here, and I'll draw that in right in here. Takes you down to about 940 bucks. It's a good target to the downside for a possible support bounce on Tesla. I personally think there's a little bit stronger support down here towards 900, but yeah. SoFi. I love SoFi, but again, it's been getting crushed, right? I don't want to say luckily. I sold my SoFi calls. I had some leaps on SoFi just because I wanted to kind of consolidate and move money to some other small caps that I just wanted to buy the dip on those instead. Because I think some of them have some catalysts upcoming and whatnot. But SoFi down here had a really strong day. I think I sold on one of these days right here where it was up over 15, almost 16 bucks a share. Now it's another time to buy again. I think it's back in the range. I said, hey, this thing can drop under 14, and it did. We got a 13 touch last week. It's going to get hit aggressively with tech. Now, some of the fintech stocks, right, SoFi, even Robinhood, they're getting killed. So these are the flush outs to be buying, in my opinion, right? Not to mention, we still got the postponement of student loans out to, was it now, May? So again, that kind of, I guess was a little a jab on SoFi, but you're going to see, I think you're going to see a lot of new customers here when those student loan refinances, need to be done. So again, that's coming up, I think now in May. Will they push it back again? I doubt it. I doubt it this time, but it's possible. But I think that this is a better opportunity now here. SoFi under 15 bucks is something that I'd be picking up in the IRA. Honestly, it's something I will do in the IRA. I had it, I added it. I think I sold some, and now I probably will buy it back. Let's see. SPXU is short S&P. SDOW is short Dow. There you go. GQQ splitting on Tuesday after market close. Mark, same thing from the DWAC. Yeah, let's see. I don't want to say I hate Mark, but I think Mark has been a good short idea. I think we talked about Mark. It had a crazy run, and I said I kind of like Mark short anything, honestly, with respect to like $2. And it's been a great one to the downside, but now you're getting to a point where, at some point you're due for a run. It has run with DWAC, and then PHUN is another one as well. Is there CFVI, I think is the other ticker that a lot of people like as well, with even, people love this one in terms of, I think it's a very similar play. So 50 SMA bounce here. This is, really nice one off of the, lows we saw at the end of last year, but it could be setting up for a nice little one again if it pulls back about another $1 or so from where we are. All right. Let's see. All right. I'd sell 15 put on HUD. Yeah, it's not a bad idea. It's funny because I think a lot of people are under the impression that we hate Robinhood, blah, 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 but I think buying HUD here, is not a bad idea. All right, let's see. This week, I'm just going to say, if we were to look at this week, if you were to look at 15 puts on HUD this week, they're about 40 cents. At least that's where they finished up last week. If you were to go out to the end of the month, let's say you go out to March. You go out to, March 18th. You want to sell a $15 put on Robinhood, it's going to be $2. So you're good. The Robinhood would have to then go below $13 a share for you to be down on that. So your cost basis, if you were to sell a put, right, it's going to be, roughly, it's going to, you're going to make sure you have to have about $1,500 to be able to buy 100 shares of Robinhood. But you would be, the $2 that you're going to get credit-wise would factor in, so your cost basis is like 13. So that would be sick to have a $13 cost basis on Robinhood, and then have someone you can either hold long term or even look to sell at the 20s and be like, oh, I'm out. If you ever get given those shares, there's a good chance you won't, because you would need you need Robinhood to close under 15 by March, or on the 18th of March for that to happen. So I honestly doubt that's going to happen, but who knows? If we get some more tech selling off, aggressive sell-offs, yeah, it's possible. Could Robinhood go under 10? Yeah, sure. BYDDY. I think if it's an OTC, I'm not an OTC trader, but let's take a look. Here's a chart on this thing. I don't trade OTCs. I'm not against it necessarily. It's been pretty strong, honestly. You got some support here in the 60 range. I would say if it holds 60, it's still holding up. That's going to be your SMA on the weekly chart right there, 50 SMA on the weekly chart, 200 SMA on the daily chart. That's a pretty good spot, $60 or so to hold up. So I'd be potentially buying with respect to that $60 level. That's another thing that I look at too, and I've honestly, if you take a step back, I think there's a lot of noise, whether it's social media, it's Twitter, whatever you're using, or whatever you like to kind of use to get information for stocks. A lot of noise, a lot of noise, but I've just found that, to be honest, a lot of bigger picture stuff has been setting up really, really nice. One of those is RIVN that I pointed out a bunch of times, and I took advantage, or I tried to, and then I got screwed one day. I just played it wrong. Looking back, this is one that's really pissed me off, because I had it. I really should have traded this one multiple times for really good wins, but I just didn't handle it very, very well. Mistimed entries, missed positions, missized on stuff, and so I screwed myself a couple times. But this thing had earnings. It pulls back, right? I'm thinking to myself, okay, we got a gap right here up to about 107. That was where we hit just before the earnings, okay? We got exactly to that gap. We literally filled that gap perfectly, and we didn't really go higher at all. We literally got rejected at that gap fill, okay? And then what happened? Consolidated for a little bit. It even pulled back the next 2 days. You could have got the thing back down under $100, so a $10 move. I probably would have taken profits there anyway. Came back up. Guess what? Same exact thing happened this past week. Started the week off. It was up here at 107, and then it pulled back down, hit 75. That's massive, massive, massive move to the downside. But just like bigger picture stuff like that you kind of see it happening in front of your eyes. You have it on your radar, but you just, you're not paying attention, or you don't take it, or you think, you're thinking too much about it. Sometimes the simpler stuff, the chart tells you everything, and it doesn't always happen like this, but this is one that's been really, really nice. I think And, I'll take it again if it comes back into range. So we'll see. Let's see. Can you look at ALLK? Let's take a look at that. Not Allstate. This is Allstate's actually doing, look at that. By the way, an insurance play, right? We talked about how some of these could be strong sectors going forward. Yeah, Allstate's up there. I mean, Allstate is I would say right at resistance right now, so be careful. But if it can hold up here and continue to grind, Allstate has room to all-time highs. Very, very realistic. All right, ALK. Wow. Oh, I remember this thing. It got hit hard, right? So these are always really interesting because they could continue to sell off for a long time. That's my only I guess, I don't want to say downside, but these charts could be setting up for longer term sell-offs. The problem is when I don't know the whole story here, I remember looking into it a couple weeks ago when it originally fell off, but when you have either bad data, discontinued, product or whatever, discontinued research or whatever onto some products, the problem with some of this stuff is that the downside, people could really kind of just go completely risk off and no one wants to touch this thing for a while. Market cap here is 455 million. I would compare that to the cash levels and potentially what they have going on behind the scenes. These are really good plays if you have time. If you're going to give yourself time and you're not going to worry about this thing, these could be really good plays. Buying this thing under $10. I wouldn't buy it all at once right here, but let's say you buy it here at $8.39 and you pick up, let's just say, you're going to give yourself 3 ads. You say, okay, I'm going to buy $1,000 at $8.39. I'm going to buy $1,000 at $6.50, and I'm going to buy $1,000 at $5. That's my plan. My average will be roughly in between all of those. Great, cool, awesome. Well, then guess what? If you get all those 3 ads, awesome. If you don't get all 3 ads, no big deal. You sell into pops. But this could be one that eventually, when the next trial goes, when they start a new product, whenever they start moving in a new direction, or they build out an old product or they build out something else, or they come back and say, hey, no, we're going to make sure we get it right on this other product or research we were doing, whatever it is. Well, these have huge gap fills and could be great plays back to the upside, and they offer tons of range. So it could be a while. My only thing is it could be a while. So if you're willing to hold this thing and you have time, then fine. But if you could be sitting here a while on this thing where it just doesn't move over 10 for many, many weeks, months. We'll see though. IINN in its recent range. Let's see what it's doing. Yeah, here. Okay, this is actually interesting too. This, let's see. I wonder if you can even short it on. I'm just curious. IINN. Let me just look at this really quick. They have the option there. I would be interested to short this. Why? Let's see what happens if it holds a 50 SMA. The 50 SMA can't hold because it's starting to show some weakness here. Now, it's been one, right? Perfect example of small cap market the past, since November, right? Had a run, right? Goes from 225 to 10, almost 10. Crazy run, awesome. Pulls back, and then guess what? All of these wicks, all of these recent runs are just showing you kind of examples of people have nothing else that people are just going to keep trading a lot of the same stocks. And so these higher lows that we put in, they set yourself up for continued squeeze outs and whatnot. But these do offer, when the trend cracks and when they do fall off, they offer some really nice downside. And so this is an example where, hey, if these higher lows can't hold up, this trend could crack. And I would say the 50 SMA is kind of that level, down towards 350. If 350 can't hold up, any pops, I would be looking to short against, let's say, $4 as my stop loss. So shorting this thing at that level to 4, and you can even target down towards, let's say I would target down towards $3 first, and then I would target down towards 250, some of the recent lows. That's kind of how I play a lot of this. I would say I would want to look a little bit deeper into the fundamentals here, why the thing was up in the first place and whatever, but these trend cracks are good for those types of plays. And let me see if I go back to last week, what I had. I'll show you a perfect example of one of those. Last week, if I go back in here, I'm going to look at Rally, and then I want to look at PTPI. PTPI, honestly, is a similar chart, but what did PTPI do? Eventually, that trend cracked. The higher low stopped, and what did it do? It went from this level right here, from 350, and it pulled to 255. So you had a 25% downtrend. Now, it's at the 50 SMA. This could be a bounce point, so this is a possible support level. I wouldn't want to short it here, but that was a great crack of the trend, and then you had that next couple of days of downside. So The other issue with that, though, with these small caps is that you probably need to have a different broker, which is why I really, really I signed up. I'm waiting to transfer some money over to TradeZero to try that out on TradeZero, but TradeZero, I would say, is a better broker for shorting if you're going to do that. You may run into no shares remaining left, or there's no availability, or super high crazy rates, or it's just not going to be available on Webull. So that's the downside with Webull right there. I want to look at crypto here in a second. Let's see. I post all that stuff in terms of position updates, portfolio, everything, all that stuff on Saturdays. So that's we talked about in yesterday's video. Every Saturday, I've been doing it for like 67 episodes, 67 weeks in a row, something like that. Maybe I missed like 1 week because I was away or something. I was like, on vacation over the summer or something. I forget, but I've done it for like that many weeks in a row. So I'm going to continue doing that until we hit 100K, and we'll probably keep going after that. But I'm going to do it. I'm going to do it every single week until we hit 100K. No questions asked. It will happen. So that's the goal. And then right now I definitely have my concern about the account is that, okay, I don't want people to just look at that and say, obviously you can go back over the past couple months. It's been small cap focus, so it's been hit. But I don't want people to look at that and say to themselves, this is how I should be investing my, hard-earned life savings. No, because I have IRAs, I have other accounts set up that I hold stuff long-term, and that's like the core of my, I guess, investing, or at least long-term, growth or wealth building, I guess if you want to call it that. The Webull account is high growth, right? It's high risk, high reward. So in times like this, it's going to take hits. That's why I need to be, my job, or at least my goal for this year, is to be more nimble and have heavier cash positions, because I found that, again, I've honestly done better taking very, very short-term day trades, smaller here and there, like not looking for crazy moves, taking my couple percent and moving on. I found that I've actually done very, very well. My win rates are actually very, very nice on red days, on super red days in the market. So I'm saying to myself, okay, when we get huge red days, that's my time to take day trades, because I do very, very well. And so it's obviously always a game of refining and figuring out what you're doing good at and stuff. But I want to go heavier cash, have less swings, but have heavier swings on that front. But right now, I think the heaviest chunk of my portfolio is in the airlines. I got leaps out to next year, so we'll see. But I think the next couple months will be really, really strong for those. So let's see. MSOS ETF. Yes, I love a lot of the cannabis plays. I like MSOS. Honestly, if you want to just get exposure to those and you don't want to buy you can't buy OTC or whatever, MSOS is a great one. This has been hit so hard. I think a lot of tax loss harvesting potentially as well, really ever since November. And so this thing could be one that a lot of people pick up this year. MSOS is one that I think is another one to put away in the IRA. I think a lot of these cannabis plays, the problem with the cannabis plays here is that a lot of the U.S. companies are on the OTC. So what happens is that you don't have exposure. It's a lot harder to get money flow into them because they're not as, I guess, readily available. Like you can't go on Robinhood and buy, some of these OTC stocks, but you can buy MSOS and get exposure that way. So that's why I would play that. That's how I play it. And you get exposure to a few companies. You guys can look up what MSOS holds. We've looked up before on the channel, but you can look it up. It takes like 2 minutes to do. Let's see. I'm going to go back to futures, and then we're going to round things out. So hopefully that was helpful. Let's go to futures here. How are things shaping up? So now a little bit more meaningful. S&P and the Nasdaq, S&P and the Dow down about 0.25%. Tech is down about 0.1. So it looks like future-wise, tech isn't selling off as bad. Small caps are, though. Small caps down a little over 0.5%. We'll see how that holds up into tomorrow. Again, take it with a grain of salt. Anything can change overnight. News can break and whatnot. So we'll see how this week plays out. But that said, futures are red going into tomorrow. So we'll see if we get some more downside tomorrow. If we do get a really big flush day tomorrow, I think that could be, offering up some good short-term bottoms for some tech bounces. So we'll see. That's at least what I'll be looking at. And QQQ will be where my focus is at for the sell-off. If we get a big flush out, I'm targeting 370 as my next area. 370 or so on QQQ could be a good short-term bounce. And then below that, the 200 SMA, which is a couple dollars below, I'd be looking at that level as well. So we'll see what happens. That's at least what we're watching. Hopefully that was helpful. If you guys got something out of the live video, all we ask, thumbs up, consider subscribing. We post updates on the portfolio every single Saturday, so go back and check that out. We can see, you guys kind of see where at least my head is at movement wise. I'm not selling my small caps obviously at rock bottom, because they can make moves of 100, 200% off of some of these lows, because I'm ideally, right, I'm buying stuff that I'm not buying some random Chinese, pump, company. I'm buying stuff that I see a little more value in as it is. So when the overall indices sell off and everything sells off, I like to be buying. And same goes for Bitcoin. I'll round that out with Bitcoin. Same goes here. I got people asking me, what I'm doing. It's kind of at support. So if it can hold up around 40,000, great. If not, we may go into a period of time, because Bitcoin is one of those risky assets, right? So we may go into a period of time where Bitcoin sells off for the next 3 to 6 months, and you go into that bear market. And if that's what happens, it happens. What are you going to do? That's when you shut up and you buy. I mean, realistically, I think if Bitcoin comes down sub 40K, down to 30K, if it goes sub 30K, I mean, those are spots I'm not going to say load the boat, because I don't know exactly where the bottom's going to be. And I think that, a lot of people don't know either. But I think a very reasonable level would be down towards 30K, because you kind of look at this setup and you kind of have a head and shoulders. Here's your head up here, bigger picture. Here's your head. Here's your left shoulder. Here's your right shoulder. And now you could be looking at a bigger downtrend or a bigger pullback or a bear market to the downside. Then that's where you pick it up. Buy some Bitcoin. If you get your average down, or let's say you have it from a way lower average, that doesn't matter. Buy it in one of those accounts. Buy it in BlockFi. Buy it in Vault. There should be a link for Vault, which is what I use, down below in the description box. Buy it there. You're earning interest on your crypto. Who cares? Don't worry about it. It's essentially money that you're putting away for the next couple of years. And then next bull run, well, guess what? You're going to probably be up 100%, 200% on some of those positions. It might take 2, 3, 4, 5 years. Who knows how long? Maybe less, but it might take that type of time. But to make 100% on money that I don't have to really worry about over the course of a year, 2 years, and on top of that, I'm earning interest on it. That's a solid way to go about it. So when everyone's panic selling, I don't think we really hit a panic sell on Bitcoin, really, to be honest with you. I think we could see a lot lower, a lot more pain. You want to see a lot more pain for that to be the bottom in terms of just going off sentiment. But if that's the case, that's when you should be buying it. And then I think a lot of people have turned into, are you guys buying the dip on crypto? And a lot of people kind of utilize, or at least think about this as that bottom, or that could be that dip. I think we're going to need a lot more. We're going to need a lot of the crypto gurus to kind of get flushed out in terms of okay, no one follows them, or they're dead wrong for months, weeks. Then that's when the bottom starts coming in. When no one's talking about it, when crypto's getting no attention, that's when you want to be buying, right? Same thing for stocks. When small caps, which I think we're that's what we're seeing right now, when everyone is nope, I'm going large caps, and it was working, tech was great. Okay, great, no way. And now no one's thinking small caps. Well, now it's small caps have been dead for a while. Now it's okay, now is the time to start really picking up the small caps, because guess what? In 6 to 12 months, they could be a completely different story. It could be a super strong market for small caps, and they could be ripping, and you'll have missed out on these absolute rock bottom lows. So it's that same mindset. If you give yourself time, months, don't just think days and weeks, think months, even potentially years on Bitcoin, who knows? It's the same thought process. When you see the sentiment is super, super bearish, that's when you want to buy. Hopefully that's helpful. Live this week, we're going to go Monday, Wednesday, and Friday. Hopefully we can get that CPI data.